Let's start with JD.com, which looks like a very nice vodka gimlet on the rocks there.
It does, Tyler. Great to be here. And certainly we may need more than 3 drinks to unpack. But I am cautiously optimistic that China is reopening. Certainly, we are seeing the second largest economy come back as the lockdowns are abating. But nonetheless, you look at JD, it's about 25% the size of Alibaba. I own both names. I want to be a buyer here of JD. But if you think about JD.com, they have a really congruent line to Amazon. If you think about the fulfillment infrastructure that Amazon has implemented, they have the ability in the same way with that last mile delivery network with their own employees. So they're taking a playbook out of the Amazon path. But if you look at JD specifically, oversold conditions, I want to see it get back above its 50-day moving average at $97. But this really should allow a fairly priced name at a forward P ratio of about 32 times really move higher.
What about NEO?
So NEO's a really interesting name. And you look at this, it's been absolutely cream crackered, right, Kelly? Down about 47% year to date. And even George Soros came in a couple weeks ago, dipped his toe with a mere $100 million. But if you think about NEO, they're really trying to find a solution over in China. And at the end of the day, they are the top performer in the EV space. They're trying to create a middle-class EV car. And as we see, all the different components that we know, there's supply issues, there's semiconductor issues, there's inflation, all those headwinds may be starting to abate over there. But again, this is a way for them to really move higher. And if you also look at the way what they have done, they borrowed a page out of the playbook of Apple that they're actually doing a battery as a service subscription. So now you can charge, you can swap, you can even upgrade your battery. So I think that's going to be pretty strategic moving forward as we do see this reopening in China.
Well, let's go to Estee Lauder, which you say is a buy, just not yet.
It is, Tyler. If you look at the chart, it's kind of been in discovery mode, price discovery, under that 50-day moving average as well as a 2-day moving average since the start of the year in 2022. So I want to be a buyer once we get back above that 50-day moving average. An old trading term, we call it buying on a stop. That's a prudent way to get into the stock once you have some confirmation from the technicals. But if you look at, people are going out again. I know we all want a zoom filter. Look at this mug, Tyler. I need a zoom filter everywhere I go. So I know I'm not using Estee Lauder products, but a lot of people are embracing the fact that we're going back out and we want to look our best. So I think you do have an opportunity. This is a laggard year to date. So I think it has an opportunity with a 35 times forward PE ratio to really grow. But at the end of the day, I want to be a buyer at this stock, Ty, at 258, not right now.
At 258, and once it crosses, and that's the 50-day moving average. Jeff,
that's right.
I assume that's right. Okay. Jeff, thank you very much. And you do not need any of those products. You look just wonderful.
Oh, my dad said I have a face for radio, Ty.
All right. We'll get you the right filter on TikTok.